I remember the first time I got one of these I wish I had known emails. And it was from someone who had immigrated to Canada. They said, wow, I wish I had found your channel about a year ago. I wouldn't have done the deal that I did in which my family lost our $300,000 of life savings.
Welcome to another program here on the Raleigh Business Broker channel. I am super excited about a special guest I have today. I have David C. Barnett joining us. I've been following David's work for some time. David is a business consultant. He's helped broker a lot of businesses, and he does it today in a capacity as a consultant. He was recently a guest on the IBBA's Insights podcast, and he has been producing content for business owners, buyers, brokers for a decade. So I find that as a fellow YouTube, I'm a wannabe celebrity. I'm humbled to get to spend some time with David here, a true YouTube celebrity. And with that, David, I want to welcome you to the podcast. Kind of introduce yourself a little bit.
Yeah, sure. Thanks, Neal. It's great to be on here. Introduce myself. One of those kids that's always wanted to be in business, all through high school and everything. I went to university and studied business and realized a few years in that what they really teach you there is how to be what I now call a Fortune 500 bureaucrat. They teach you how to be a small cog in a big wheel of a large corporation. But my heart and my interest was always in small business. And I lucked out when I got out of university because I started working for a Yellow Page publisher. So I was able to go and meet with the owners and managers of all the local businesses that you go and meet when you're out trying to find businesses to sell, probably, Neal. And so it gave me that real education on Main Street, on the small businesses that we have out there. Eventually, I left that role with the evolution of the internet and Google and all that kind of stuff. I started a business of my own. So I went through a startup experience. And I ended up selling that first business. And then I got into brokering commercial debt. So I was helping business owners expand through getting financing, equipment leases, factoring facilities for AR. And I met some people that were trying to buy businesses at that time, and they were looking for money. And what I saw was pretty shocking. I didn't know anything about business brokerage at that time, but what I learned really quickly is that a lot of the deals that were being put together by people who claimed to be qualified intermediaries were just clearly they didn't know what they were doing at all. I saw people lose deposits on deals. I saw deals for businesses that didn't contemplate working capital to any degree. I just saw a lot of really bad situations. And when the great financial crisis hit, I had to make a pivot because the whole lending world went upside down with respect to small business lending. And so I said, you know what? I'm going to get into this business brokerage thing and I'm going to learn how to do it correctly. And so I joined up with one of the big franchise brands, and that introduced me to the IBBA. And I went through the CBI program and finished that back in 2010. And so I worked as a broker for 3.5 years and sold 35 companies for other people. But as you know, business brokerage has a pretty roller coaster type cash flow at times. I would sell a few businesses, get some money in the bank, then do a 9-month stretch without a deal closing, for example. And so with a young family, I knew I couldn't keep doing it. I left the industry. I sold my office to someone else and became a banker. And I did that for a few years. And my phone kept ringing. People were looking for help on deals. And when the bank reorganized and I was offered a package, I thought, you know what? I think I'm still interested in helping people buy and sell businesses, but I don't think I'm interested in being a broker. And so I created this consulting practice model where I do a lot of the things that brokers do, but I just bill for my services. I basically tell people that I take the business model of attorneys and accountants and I apply it to the world of buying and selling businesses. I work with buyers and sellers, and the YouTube channel and the books that I've written initially, I was trying to use them as a way to create a bank of content that I could share with people, because so I wouldn't have to keep repeating the same things to everyone over and over again. But the viewership grew and it turned into one of the main marketing channels for my business. And so now when I meet someone on the internet who either wants help with buying or selling, they usually tell me that they've spent some time watching my videos. And it's just a consistent publishing practice of putting up videos and interviewing people that can contribute to the conversation about either deal making or operations has allowed me to build up that content. And I'm happy that you found me, Neal, because people in the audience that are business owners or brokers or other professionals They add a lot of great content through the comments and responses and enrich the conversation for would-be buyers. And there's a lot of people out there who, especially recently, have become aware of this idea of buying a business, and they
Oh,
don't know much. And they're looking to the internet to try to educate themselves. And so I'm trying to get real information out there
yeah.
that really can help people set people's expectations for what this really is about.
Appreciate that introduction and kind of setting the stage for our conversation today. Because some of the things that I want to touch on with you is the stakeholders and deals, which you've touched on, how people are finding information, how people may be becoming misguided, what it's like to be on a YouTube platform, what that
Mhm.
conversation is like. I feel the same thing. By the time people call me, I'd started doing YouTube videos because I wanted to answer the frequently asked questions. And I knew that people wouldn't often call me until they were ready. So I could have that conversation before they were ready. I really like YouTube for those elements too. But it's interesting how YouTube has evolved over the years. So that's one. I want to have a content creator question that's specific
Sure.
business brokerage, and you've already opened the door for that. So I would consider you a leader in this. We'll call it the SMB space, the small and medium sized business transaction space. And you can explain how you got here. Now I want to ask, why do you think it's important? What does it mean to you, the people that are tuning in? You've touched on this a little bit, but let's go a little bit deeper. What are they looking for? And why is it important what we say online?
My mission is driven by a couple of emails I received over the course of the years. So I remember the first time I got one of these I wish I had known emails. And it was from someone who had immigrated to Canada. And they said, wow, I wish I had found your channel about a year ago. I wouldn't have done the deal that I did that in which my family lost our $300,000 of life savings.
Wow.
And so when you get an email like that and you're like, wow, maybe there's somebody else out there with 300,000 that is now going to avoid the loss because of the videos that I've made. And a lot of the stuff that you see out there, I actually saved one today that came up in my Twitter feed because I knew we were going to have this conversation today. A lot of the stuff out there is really um, this cheerleading sort of raw, this is a huge opportunity. It's really easy. You're foolish if you don't take advantage of this opportunity to buy a business. And it is drawing people into this world who really don't know what it's going to be like on day two. And I've been calling this the day two problem for a long time because people will be so focused on getting a deal done that they won't see beyond that to what the operations are going to be looking like. There's a book cover back there behind me, Smarter Than a Startup. And I titled that book Smarter Than a Startup because I wanted to write a book that had the word startup in the title.
Yeah.
As you do more and more work online, you begin to realize how important keywords and algorithms and all that
Yeah.
kind of stuff is. And that book came out in 2019. And 15 years ago, the startup world was a very big topic.
Yeah.
And everyone was talking about starting a new app, starting a new online business, startup. We saw the word everywhere. And there was this huge exuberance or mania around that topic. And in that book, in the introduction, I said the whole buy a business space is on the same track, just 15 years behind.
Yeah.
And I think that we're seeing that right now, right?
Yeah.
Because now the quote on Twitter, so a person on Twitter shared an image of two different of these buy a business gurus, each with exactly the same ad copy in social media posts.
Yeah.
Okay. So one copied the other, but it says 10,000 boomers retire a day, 8 to 10% own a small business. Their kids want to be influencers, not take over the plumbing company. Here lies the opportunity. Let's think about that message. Who is the target of this message? The target of that message is somebody who does not even think about business or buying a business.
Yeah.
The target of this message is somebody who is opportunistic, someone who wants an opportunity, a get rich quick kind of person who's open to this kind of messaging, right? So it's not somebody who's thinking about buying a business. It's somebody who's being drawn into this world.
Mhm.
And what these gurus have is some kind of training or program that they're going to sell them on how to buy a business. Right? And the end motivation of the guru ends right there. It's just in the sale of the education or training,
Yeah.
right? That's it. And oftentimes we'll ask people if you're having trouble getting around town and you walk into a car dealership and say, I'm having trouble getting around town, there's almost no chance that the salesman's going to suggest you might buy a bus pass.
Yeah.
That's not what they do. And so when people listen to business brokers, most people understand this person is trying to sell a business they have for sale.
Yeah.
We understand the motivation. But a lot of the times, I think that people don't stop to think about the motivation behind the messaging that they encounter. It's like just a bit of a media awareness kind of thing. Before the last couple of years, and I would say this stuff all started big time about 4 years ago, maybe just before the pandemic hit. The average person that I would meet online was somebody who had some kind of experience or background in business. They were usually a mid career person who had maybe grown to a management position in a company. And they realized that their ultimate ambitions career wise were never going to be met by being an employee.
Yeah.
And they thought, you know what, I can do it on my own. And usually that person would explore starting a business of their own. Hence the book title, Smarter Than a Startup. Okay. And so those people would explore starting a business, but then quickly come to realize what sort of risks were involved in starting a business, especially if it's a person who's got kids on their way to college, a home mortgage, family obligations, that kind of thing. And so then they will eventually come to the idea of maybe I don't have to start a business. Maybe I could buy one. And if you go into Google or any of the online platforms and you type anything to do with a specific question about buying a business, you're probably going to find some of my content because all of my content is designed to answer questions around the transaction or operational issues, etc. Right?
Yeah. Yeah.
And so I don't advertise for new people. I don't try to convince people they should buy a business.
Yeah.
I'm just creating content so that if somebody goes looking for that information, they'll find me. And so these other people are actually trying to draw newbies who are green beyond the wet behind the ear newbies into this space, indoctrinate them into this idea that there's somehow this fantastic opportunity in front of them. They're foolish if they don't take advantage of it because they're missing out, right? And for some of these people, their reaction is, ooh, if this is such a big opportunity, I don't want to miss out. I want to do this. I want to sign up for this program, right? My, I retweeted that message on Twitter, and my comment that I added to that was, and 90% of those businesses are not worth buying.
Agreed. Yeah.
And you and I both know that because you've
Yeah.
seen a lot of businesses from owners that you've probably rejected. You've seen a lot of businesses where you look at the financials and you go, look, there's nothing really here that someone's going to want to buy, or you don't have the systems in place to be able to really hand it over, or et cetera, or concentration risk. There's all kinds of reasons why a business may not be very marketable. But that's not what the sort of gurus are going to say.
That's not sexy. It's not sexy to
No.
get into that. Yeah.
And there's a lot of people out there teaching stuff to do with buying a business, all the way up to Harvard University's acquisition entrepreneurship through acquisition program, or like the whole spectrum is here. There's books you can buy. I have an online training program people can sign up for. It's been available almost since I started on YouTube. It's a couple $100 and it teaches you the process, and it's really designed to help cultivate clients for my consulting business. There's no hard and fast rule because I know other people out there that are doing buy a business boot camps, and I've talked with their students,
Mhm.
and their students claim to have gotten great value. I've also talked to students who've done some of these guru programs for $6, $10, $15,000 who were taught that they could somehow buy a business with no money, even if they were broke. And when they eventually realize that they can't get these deals done and they go looking for answers, they find people like me.
Yeah.
And I, I had this one guy who was really on, and I've interviewed people on my channel who've gone through these programs. So there's stories on there. But this one guy had 3 different deals he was working on. He was trying to do them all with 100% financing. And bankers weren't returning his calls.
Yeah.
And he had done everything he had been taught to do in this online education program. And he said, after a while, I kept bugging my instructors for further and further information. They just stopped returning my emails. And I said, tell me about your deal. And so this guy wanted to borrow 75% of the money to buy a business from a bank.
Yeah.
And we wanted to borrow in various other ways the other 25%.
Yeah.
And I just said, what's your opening balance sheet going to look like? What's your debt to equity ratio going to be? And he didn't understand what that meant.
Yeah. Yeah.
Right.
That's
And,
the
and, and I said,
problem.
I said, any bank that is going to look at a deal, they look at that debt to equity ratio because it's a way for banks to measure the risk of the loan they're going to make.
Yeah.
And if you have no skin in the game, then they're going to have to get their risk covered in another way. And so you're in the United States. In the US, the SBA guarantee program is one of the ways that banks manage risk.
Hmm.
So it's either got to have some kind of guarantee program attached to it, or there has to be sufficient equity put in. There's just these gaping holes in some of these programs. And I think that what the gurus are hoping for is that people feel inundated with information. They feel like they're in over their head. They don't actually act on it and feel embarrassed and don't ever realize that what they ended up getting maybe wasn't really worthwhile.
Yeah. And this, to be fair, this type of program exists in all industries. We're seeing more of
Mhm.
them now in the business brokerage space. And well, I think it was really interesting what you said about 15 years ago with startups and now it's resales, it's buy a business. But this ETA, entrepreneurship through acquisition, this is definitely a big trend. We're seeing more and more buyers following this plan. And I'll tell you something else that's interesting is I interviewed one recently, and this individual who pinged on some of our deals said, they do, they do on the outside, you do see the no money down, get a laundromat with nothing down and cash flow immediately, whatever the story is. But once you get in there and you get into the masterminds, you see the deals that are getting done. Those aren't the deals that are getting done. It's more traditional bank finance. You bring this, the deals you're talking about, David. But that's not sexy. So these are marketing programs, and they got to have a sexy message to get people excited, get in the door. But the reality is what's going to get the deal done. And yeah, it is sad if people go into that without a strong balance sheet and their marketing convinces them that they're going to get the tools to get out on the other side in a better position, because that might not be their best investment. And by the way, that's what we tell a lot of business buyers when they come in, they're not strong enough. We just say, how about wait? How about not yet? How
Mm.
about save up a little bit more capital? Number one reason a lot of businesses fail is they don't have the working capital. Let's
Yeah.
not let that happen to you.
You don't want to put your last nickel into a deal because then you're in a position of weakness. I think that buying a business is a leveling up move.
Yeah.
And so it's not something you come at when you're broke. Like the a lot of the marketing for some of these programs is done from the same point of view as a lot of other get rich quick type of promotions, right? And if you are a person that doesn't have money and you're in debt personally, buying a business is likely not the solution to your immediate financial needs.
Yeah.
If you are a person who is in debt and has a negative net worth, or you're just broke, you don't have any money, it probably means one of a couple of different things. It means you spend beyond your means, or you haven't developed skills and talents that allow you to earn a higher income, or it means that you don't have discipline. So when you do have money, you spend it, right? If you don't address those kinds of things in your own self before you become an entrepreneur, owning a business is not going to solve any of those problems. It's just going to allow more opportunities for those problems to interfere in your life. And this is why, bankers, when they go to lend on a business deal, I'll get questions from people on social media and they'll say, is this credit score high enough to borrow money to buy a business? Is this credit score high enough? And my response is always the same. The assumption in the world of business is that your personal credit score is pretty much perfect,
Yeah.
because bankers are going to look at the way you manage your money in your household and they're going to assume this is how you're going to manage your money in the business.
Yeah.
And so if you've got all of these strikes against you, it's either got to have a very clear cut explanation, like I had a job loss 3 years ago and fell behind on some of my bills. And you can see that once I started working again, everything got back on track. Like, very explainable. There was an event and here was the solution. But if you've got a credit file that shows you're late on things off and on through your whole life, that's not telling a good story about a disciplined person that has their priorities in order. And figuring out how you're going to buy a business, and especially if you have no money to put in. What it means is that you don't have access generally to banks, which means you have to try to band-aid or duct tape together some kind of deal using a bunch of other alternative kinds of finance solutions, credit cards and merchant cash advances and leases and all this kind of stuff. And you end up bundling together this high cost financing solution. And then maybe you do succeed in getting the deal done. Because I see things online too where people say, hey, this person successfully bought this business with nothing down. And when I hear the stories, and I'm listening carefully and I look for little clues like it's a landscape business. And I think, okay, so his SDE margin is probably somewhere between 10 and 20%. And if it does $1 million in sales, that's $200,000 of cash flow. And out of that, he's got to take care of CapEx because SDE and EBITDA add back depreciation. So he's got to replace equipment in a business that uses up equipment. He's got to take some kind of salary home for himself. And now we know that he's put together a $500,000 financing package, probably with an average cost of 15% or something. And you start running the numbers in your head and you're like, this person doesn't know that they've given away all their cash flow to financiers.
Yeah.
Yeah, this person doesn't know the trouble that they're in. And it's not just people that are new to the field who don't know what they're doing. You mentioned ETA, entrepreneurship through acquisition. That's a catchphrase that kind of comes from the MBA world, out of the search fund community. And so we're talking about MBA grads from some pretty well-known universities. And there are certain podcasts and things where people are telling the stories of the deals that they've done. I actually heard a story of a person who did a deal for I think it was almost $1 million SDE business. And they were talking about the multiple they paid. And as they're telling the story, the hair on the back of my neck went up and I said, oh my God, they've overpaid for this business. I don't know if they know. And then as the story unfolded, they started to talk about how they had to replace some trucks and they had to do this and they had to do that. And the person being interviewed actually said that he was struggling to take his $150,000 salary out of the business. So, $1 million cash flow, they paid a price based on a multiple of that valuation.
Yeah.
Now is struggling to take $150,000 salary, right? And the point that I'm always trying to drive home with my audience and my clients and everyone is that you cannot overpay for a small business.
Yeah.
You just can't do it because all you're doing, I had a guest recently on my show that told a story too about this. All you're doing is trading the startup risk that you would have in starting a new business for a different kind of risk when you buy a business, which is finance risk.
Yeah.
Right?
That's a great point.
Because if you overpay for the business and you overcommit the cash flow to debt service, all the good stuff we say about buying a business, like you already have customers, you already have employees, all that kind of stuff, all the benefits evaporate because if any one of those pieces falls off, you now can't make your debt service.
Yeah.
So you just move the risk from one place to another. And the whole idea behind buying a business is to reduce risk.
It's so true. And this is a great notion to talk about for business buyers of this finance risk. And when we have clients that are selling their business, they come in and we build the story. I call it the financial story. Here's your revenue. Here's your cash flow. Here's how it's grown over the years. The business buyer looks at it and they're like, I'd love to have that cash flow. But they're stepping in, unless they're paying all cash, which is a different scenario, they're stepping in with some type of financing. So they're coming at it from a different position. They're bringing debt into the deal. And the current owner doesn't have that. So they're accepting that, yeah, banks are great partners because they're not going to tell you how to run your business, but they do have a partner in that they could lose their business if they don't keep paying their debts. And I think that may be lost on some business buyers. When they're over leveraged, it is risk. And when the rates went up, that was the first time we started to hear from current owners like, this business is great if I didn't have all this debt. I want to sell because every dollar I make goes to finance. We didn't hear that before rates went up. That became a new reason people were selling businesses. As a business broker, it was nice to have usually it's people are getting older, they want to spend time with the kids, but to have this business makes money, the financing is just the problem. Challenge there is the next buyer is going to probably get financing too. But financing is a big part that buyers don't always consider. They may run the numbers, but to your point, leave some wiggle room in there. I call it the go forward position. After you buy this business, after you've put your dry powder into this deal, what type of buffer do you have? By the way, not just the seller doesn't care too much, but if there's a landlord involved, they're
Hmm.
going to want to know that you've got a buffer there. And of course, the bank wants you to be in a good position as well. So, very valid points about people over leveraging getting into these businesses. And that's probably not a big focus of some of these boot camps.
Yeah, I haven't attended any of them, so I don't know for sure. But the tendency to want to put a lot of leverage onto these deals is it's especially prevalent in the US,
Mhm.
and it's fruit of the SBA. In the world of big businesses, big corporations, for example, if you look at most balance sheets outside of the financials, that if you remove that sector from publicly traded companies like your banks and everything, most industrial companies have leverage on their balance sheet between 50 and 60%. Because if they tried to go further, the lenders or the bond buyers or whomever is going to be advancing money to them would start to see them as riskier and demand higher and higher premiums of interest, right? And so there's some magic sweet spot. And people in big companies spend a lot of time trying to figure out exactly the right way to set up their balance sheet to get maximum access to the cheapest debt they can, which boosts the return on their equity. But they can't go too far or else the debt costs start to go up. Where this is skewed or where this is different in the world of small business is that an SBA guaranteed loan has the same interest rate, whether it's for 50% of the purchase or 90%, which is not something you would see in a normal free market scenario. So the person who buys a small business, if they can put 90% leverage on it and pay the same rate of interest as if they were putting 50% on, there's all of these incentives now to try to put the highest possible leverage on because it's going to give maximum boost to the equity,
Yeah.
right? And so I've seen very smart people who've put these models together, and it's all based upon it's essentially taking advantage of the fact that Uncle Sam is inadvertently subsidizing the cost of money through the
Yeah.
SBA loan program. Okay. And so you have this strong incentive to put maximum leverage on these deals. And then something like these interest rate hikes happen. And then people end up offside. Because I've heard the same kind of comments that you're talking about, where people that were very happy 2 years ago are now freaking out because
Yeah.
their costs have gone up. And is selling even an option? Because if someone else is going to buy the business, to your point, they're going to want to put a loan on it as well. They're going to
Yeah.
look at the same costs.
It limits your buyer.
Of course, right?
You introduced that's an interesting perspective you just gave that so for those who are watching and you don't understand, because it took me a while to understand how SBA really works, but the government's not lending the money. They're just telling the banks, we're going to insure 70 and sometimes 90% of your loan. So if the loan defaults,
Yeah.
you the bank won't be responsible. So they are encouraging higher risk. Their banks are taking deals they may not have taken because of this insurance. And so it is encouraging risk. And yeah, in America, it's let's lever it up. I never thought about that.
If you want to open a can of worms, Neal, that I'm sure is going to create all kinds of interesting feedback in the comments down below, I'll even make this statement, which has made me unpopular in some quarters. The SBA does not help people buy businesses.
Okay.
The SBA helps people sell them.
Oh, okay.
So,
I see where you're going.
because if you think about it this way, if you go to buy a car, cars are 50, 60, $70,000, right?
Yeah.
The car dealer's got all the financing options lined up there. Why? Because it helps them sell the cars.
Yeah. Y- Valid point. That's very true. And then we
Yeah.
look at if the bank won't finance it, then we're looking at the buyer because people aren't going to put all cash down on big businesses. So someone's going to have to finance it, and the buyer or the seller doesn't. If it's the bank doesn't, then we're looking at seller financing. That's not typically what owners want. Some do, but you're right. It makes it a little more slippery. It removes some of the tension there. It shifts the
Yeah.
risk over to the bank, and then the bank is shifting it over to Uncle Sam in this scenario.
Yeah. And so I'm a huge proponent of what I call material seller financing.
Mhm.
So, what is a material amount of money? It's an amount of money that the seller doesn't want to lose. When someone has an SBA loan and the seller is told, oh, you got to hold 10%, I'm sorry. Many people who sell their businesses would, if there was any kind of problem, walk away from that 10%, right? It's just not a material amount of money.
Right.
If we start to talk about 30 or 40% seller financing,
Hmm.
sellers will not walk away from that amount of money. So, what is that going to mean? It's going to mean that the seller all of a sudden is going to put their banker hat on and they're going to seriously take a look at who the buyer is. They're going to really underwrite this person and make sure that this is an ideal candidate to take over their business. They're going to make sure that they provide adequate coaching, training, and support to make sure that buyer is successful, right? A material amount of seller financing actually aligns the interests of the buyer and the seller. And all of those things I just described that a seller would do if they were being asked to finance 40% of the deal, all of those things work in the favor of the buyer to reduce their risk because the seller knows the business intimately better than anyone else. And so if a seller says to a buyer, I won't do any seller financing for you, to me, that's a red flag saying this person doesn't have confidence in you, or they know something about the business or the market that's changing, and they don't want to be left holding the bag if the business fails. So I coach buyers, you've got to have a material amount of seller financing to make sure that you're dealing with a committed seller who's then also going to support, teach, educate, and be there to help guide you. In my mind, a successful deal is one in which the buyer and seller can call themselves friends after a few years, where they have a relationship where that buyer knows that they're getting great feedback and coaching from the seller to help teach them how to run the business. And that seller is confident in the buyer that they've chosen the right person to take over the business. And this person is going to be successful so that they can collect all their money. When you do 90% financing, you remove all of those positives. It
Mhm.
becomes transactional. And then it becomes like selling a used car. You're selling a used business. It's like selling a used car, right? The buyers are all afraid that there's going to be these unforeseen difficulties or problems, right? With only a 10% seller note, there's not much recourse if something goes wrong. If I buy a business and I've got a 30 or 40% seller note, then there's an offset clause in the note, which there always should be. I know that if it turns out that the seller lied to me about something, that I can offset my damages against the note. So buyers feel, and so I know you've got some sellers and business owners in your audience. Buyers feel more confident paying a higher price if they know that they're protected with this kind of arrangement.
Yes.
So material seller financing helps buyers get better support. It helps them find more financing, usually at better interest rates, for example, than maybe a bank loan. And it gives the buyer confidence that the seller believes in them. At a moment in time when a buyer's taking huge risk, they're taking all their savings, part of their retirement account, home equity, all this money, and they're putting it into this deal. They're trying to make it work. The seller doesn't face anywhere near the same risks. As you pointed out, they don't
Yeah.
have debts. They already own their house, their RV, their condo in Miami or whatever. Like they've got all their toys.
Mhm.
And so the seller knows the business intimately, the buyer does not. The risk is insurmountably slanted towards the buyer. And so when sellers say, I want top dollar, the one way I'm telling you can get top dollar is by saying, and I'll finance 30 or 40 or 50% of it. I'll put my money where my mouth is,
Yeah.
make sure I get the right operator. When I'm talking with buyers, we sometimes try to come up with more than one offer.
Mhm.
And we will come up with an offer using a bank loan, like a 90% financing. And then we'll come up with another offer with a material amount of seller financing. And that offer is always higher because the seller being willing to finance like 40% of a deal is worth something to the buyer,
I agree.
right?
I agree that with that. Yes, and but to play devil's advocate, I represent sellers, and I agree that seller financing does align buyers and sellers. If the owner, the outgoing owner is needed on a long-term basis, which often they aren't. If it's a great business, it shouldn't be relying on the owner. But some of the greats in SBA, I'm thinking of Steve Mariani, for example, would argue that why would you take side the risk? A business owner is not going to give a 10-year loan. So if a buyer is looking for low payments, they're doing themselves a disservice to put some of that into the bucket of seller financing, which is going to be a shorter term loan and higher monthly payments. We talked about how business buyers can be suffocated by debt service. That's another argument of why not put it into the bank loan, which is a longer term that's just another perspective, and I'll leave it at that because I want to get into.
Hang, hang on, Neil. It's whatever you
Okay,
negotiate. So I've had plenty of
agreed.
clients do seller terms over 10 years, longer
Agreed.
than SBA loans. So it's whatever you negotiate.
Yeah,
And if you're a seller and you've got a hot kind of business and all kinds of buyers are competing with each other to try to bid each other up to get your business, then obviously you're not going to agree to those kinds of terms,
yeah,
right? And so it it's and this is why it's such a great sort of market to play in, because it is not a transparent market. There's all kinds of deals getting done for which we don't have complete information.
that's
There's
very
all
true.
kinds of different industries where there's lots of buyer interest versus industries where there's not. And for the people that are willing to dig and find deals, they can make better opportunities for themselves. Yeah. Anyway,
I,
the,
I agree that it's whatever buyer and owner agree to. And I like the two offer opportunity where it's true. If an owner is willing to offer seller financing, that should be worth more because they are saying, I'll go along with you on this risk. But most of our owners, they don't want to be involved with something for a decade after they sell. They want to be on to the next thing. But to your point, if they believe in it and they know it's going to make money and the next owner can't even screw it up, those payments are almost guaranteed, then why wouldn't they go along? But so I see both sides of it. Before we run out of time, I do want to get into, we talked a lot about buy side. I do want to talk about what you're seeing for sellers, the owners that you're talking to, who I like this frame of over time. How have owners changed in that the consultations that you're doing, business owners coming to you? Have you seen it change in that? And we got the silver tsunami. We talked about that a little
yeah.
bit. All people that are boomers that want to retire. But have you seen different buckets? I'll call them groups of business owners coming to you. How would you categorize the type of businesses owners that want to sell lately?
It's interesting because we talked at the beginning about the experience with YouTube.
Mhm.
And what I've learned over the last decade is that people who want to buy a business have lots of time to be online.
Yes.
And so the majority of my viewers and the majority of my interaction with people online has been with buyers.
Yeah.
The people who are business owners are busy running their business.
Yeah. Yeah.
And so the experience I have with them is very different. And so what happens with these people is they will be doing something and they'll come up with an issue problem, or they'll start thinking about selling their business, and they will maybe do some searches online, very quickly find me or someone like yourself, and then they reach right out and start a conversation.
I see.
So it's very different. And how have they changed? They haven't changed at all, in that I don't know if I necessarily believe in the silver tsunami.
Breaking news: Silver tsunami is not a thing. David Barnett explains.
I've always, since my business broker days, have said that there's 5 reasons people sell a small privately controlled company. There's mental reasons: burnout, boredom, and fatigue, right? I can't stand it anymore. Then there's divorce, poor health, the need to relocate, and retirement. And retirement is the only one that is planned for.
Yeah,
So even back in 2010, 80% of the people that walked through my door were not talking about retirement. And today, in the business owners I talk to about selling their businesses, most are not talking about retirement. It's one of those other things.
yeah,
And so when people think, I'm going to go buy a business, I'm going to target these retiree aged people, I'm going to target folks with gray hair, the sellers are across the spectrum, and
yeah,
they're across those 5 different reason buckets. So it's not just the retirees. And as I mentioned earlier, when my comment about that Twitter post, you and I both know that the vast majority of small businesses are not worth buying. And so while it may be true that there's huge waves of baby boomers that are retiring, a lot of them are just closing their businesses or liquidating them, or what have you. They're not really all crowding into your office.
yeah. And I would agree with that. When I ask you that question, I was thinking about, in my mind, I see the retirees. I call them the young hustlers, which they're creating businesses, getting bored and selling them. They're doing that over and over again. And then there's the other buckets that you talked about where their doctor told them that they had to sell. We're definitely
Mhm.
seeing more of the young hustlers that they got bored with the business, but they're ready for a new challenge. I like the business owner who's self-aware enough to realize they've taken the business as far as they can, and they're not old, but they just realize that they can't push it to the next level. I think that's a great reason
Mhm.
to sell. We definitely are
Yeah.
seeing more of those. And you're right also, a lot of the older business owners, it's interesting because they come to us. You did a video recently about some type of service business, and it was a one-man band, and you were giving them advice on deal structure. We always say, build a team and come back to us when you have a real business to sell. And we say it in a polite way, but these guys aren't going to do that. The
Yeah.
time to do that was a decade ago. They're like, I want to retire. I don't want to grow this thing. So I think you're right that if they've gotten to the end of their career, they're not going to grow it anymore. If it's not sellable, they may just close it down. And there's nothing
Was
wrong with
that
it.
was that the video I made about selling a client list?
I
Maybe?
think it was. Yeah. I don't know if it was
Yeah.
pest
Yeah.
service or lawn care or something like that. But we
Yeah.
definitely get a lot of calls from individuals like that. And your advice, hey, would you basically, I did a video recently about how estate planning and business exit planning are really very similar. Like you can plan, it's going to happen whether you plan it or not. So why not plan it a little bit? And the tie in with this conversation is if you're selling a client list, that is one way to go. If you don't want to, you could work for someone else and partner with them. That's a choice that you have to make. But if you don't want to do that, you don't have to. That's the beauty of entrepreneurship. You get to decide to a certain
Yeah.
extent. That's interesting perspective about the silver tsunami not being a real thing. There's no doubt that
I just don't think it's the thing it's being made out to be.
yeah,
That obviously baby boomer age people are retiring, but when I see tweets like the one we mentioned earlier, I don't think we can characterize it the way it's being portrayed.
yeah. And when I got into business brokerage, that was 9 years ago, they were talking about the silver tsunami then. So how long can the silver tsunami? Maybe we're past it already. Before we start to close this out, I did want to just ask you about private equity and back to business buyers a little bit, but more on the relationship to sellers. Talked about ETA. I'm seeing private equity nibble at smaller stuff. How is private equity? Because private equity is really big right now. How are you seeing that play into this churn of all these business buyers? And how's it changing the landscape in your opinion, David?
Back before interest rates started to go up, the returns in the stock market were very low. At the stock prices were really high. Private equity, a lot of that money often was involved in public markets. And so 4 to 5 years ago in my group coaching program, I started to have more and more of my buyers end up losing deals to private equity buyers. And we're talking about businesses as small as like 700,000 EBITDA, even 500,000 for bolt on acquisitions. Usually never the space you would ever see a private equity player get involved with. And what has happened since then is now interest rates have gone up. We're still seeing private equity interested, but I don't know how long it's going to last. The typical private equity fund has a 5 year investment horizon, right? And they've been buying assets, private businesses. There's no stock market for a private business, so they don't have to mark their assets to any kind of market to show their investors how they're doing. And so they can model the value of the businesses they've acquired. So there's a lot of people who are seeing these private equity funds talk about their great track record, but until the assets are sold, they really can't prove their track record. So there's a lot of people out there who are probably seeing these great performance numbers from private equity, but right now with high interest rates, it's going to be hard to sell some of these businesses and make money off of them, sell at a higher price. And so over the next couple of years, when these 5 year funds have to start unwinding these assets, then their investors are going to find out what has really happened. And I think that's going to set the tone for private equity involvement in small business for a long time. There's a huge lag time in data and information in that part of the space, just because there's no ticker price
Yeah.
for the things they've invested in.
Yeah, private transactions, you never really know. We have, as brokers, we have some great input into the tools that we use that we put our information into, but it's not publicly traded information. You bring a lot of unique, interesting perspectives, having been a banker and a broker and a consultant. I'm sure you've heard a million stories. I appreciate you sharing some of those stories with us and our audience. I would like to give you a chance to share how people can find you, who you
Sure.
best serve. Share any type of plugs that you'd like at this stage, David.
If you go to davidcbarnett.com, that's my blog site. You can sign up for my email list over there. And if you're just interested in learning more about this stuff, if you just type David Barnett Small Business into any kind of podcast app or YouTube, you'll find me. The audio of my videos is released as an audio podcast. So whatever's the most convenient way for you to follow the content, you can sign up, and love to have you in the audience and hear your comments and feedback whenever you disagree with me.
Love that. Yes, great discussion in the comments and great content that you're putting out there. I think you're helping a lot of people, David. Thank you for sharing some time with me. I'm Neal Isaacs, the Raleigh business broker. Everybody out there, thanks for watching, and we'll see you next time.
Thank you.